Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Traders are back from the holiday and back to business, right? This is going to be a surprisingly busy week of earnings for this late in the quarter. So expect a pretty steady flow of news over the next few days. Some bigger names as well. So lots to look forward to, which is unusual for this time in the quarter. Especially December as well. Um, as is usually the case, Monday morning, pretty quiet. Pretty much each week, it's kind of hit or miss. I mean, occasionally you'll get like interesting report here and there. JD last week was one, but like for the most part, Monday morning's kind of hit or miss, mostly on the miss side. Um, Monday afternoon this week, even that's kind of quiet. Really, no major name. Uh, you know, a smaller retailer like Buckle, but just don't have a really good feel for it. Doesn't have like a great history of performance. So probably just Monday morning, Monday afternoon, probably just kind of focus on the names coming up. And Tuesday morning, this is kind of where the action starts to get going. So you have before the open on Tuesday, retailer Hibbett, which I have up here, and Cracker Barrel. So a restaurant named Cracker Barrel, CBRL. Hibbett, I am expecting to be a pretty big mover. Um, last quarter here dropped 30%, give or take, right? And it's basically just off its worst level of 2018. So it's not quite at the October low, but it's really not too far removed. Uh, so stock performance pretty bad. Retail's been really volatile already this quarter. I mean, that's kind of like a recurring theme. Retail's volatile, but I mean, this quarter already seen some pretty big moves. Uh, so retail's been volatile. Hibbett was really volatile last quarter, but the options are actually pricing in about 3 points, right? And I mean, it moved almost 9 last quarter. I mean, I know it was like up around 29, but options are priced in about 3. It moved 9 last quarter, and technically, there seems to be visibility for maybe like a 4 to 5 point move either direction. Um, 4 or 5 points down, maybe 4 to 5 points up into like 2150, 22 area. So at 3 points, priced in seems to be some room there. So that's what I was thinking, a volatility strategy, strangle, straddle, something to capitalize on options that appear to be underpriced. Um, that's what I was thinking on Hibbett on Tuesday morning. Cracker Barrel a little bit different. So it's not the most volatile restaurant name. McDonald's, CMG. I mean, there's plenty of others. Red Robin, Jack in the Box. All these tend to be a little bit more a little bit more of movers when they report. But Cracker Barrel is actually up. If I go back a little bit further, it's actually up near the top of multi-year resistance. So going back to 2016, you can see right here. So what's interesting is that Cracker Barrel actually missed and guided lower back in September, which you can see knocked it down to like 140 area, but it's up about 30 to 35 points off that off that low. So really an impressive run considering like they missed and guided lower, and in the context of what the overall market's been doing, even more impressive, right? Um, I guess the issue here is that coming off a missing guide lower, so not really much earnings momentum, but with the stock near the top of long-term resistance, like I showed, like 175 to 180 long-term resistance, it's kind of interesting because if they can put together a decent report, there could be a pretty big potential pent-up breakout. I mean, you're looking at a move through 3-year resistance. Um, Options are priced in at about 12 points, which for the most part is kind of near the top of its average move on earnings this year. So, this could be kind of like a wait and see setup. Options are a little bit more expensive and they're top of resistance coming off a miss. But it's like one of those scenarios where if it's good and it gets up through 180, I mean, a pent up 3-year breakout should carry this closer to 200. So there's some room there. So, maybe wait and see how the earnings look, and then if it opens up above 180, 185, then maybe you can like try like a quick momentum trade for a move up to 200. So it's one on the radar, but not necessarily sure we're going to play. I mean, it's going to be kind of like a wait and see for me. After the close Tuesday, pretty big software night. So Salesforce is the big name, and then you have Nutanix, which is a smaller software name, but also probably gonna be pretty volatile. So going back to Salesforce, market cap wise, this one's gonna be big. Um, Percent wise, probably won't be as big of a mover as Nutanix, but 100 billion market cap, give or take, one of the biggest software stocks. This one's going to be a pretty key report. So just a brutal month. I mean, a brutal October, and then November really hasn't been too much better. So CRM is going to be reporting below its 200-day for the first time in several years. Um, and I really like to say the way I describe this is that sentiment's going to be a big player in this setup, and actually, I'll talk about in a couple minutes about a handful of other software stocks that are reporting later this week. And so what I mean by that is that these software stocks for the most part, they've been beaten up, but the numbers haven't been bad. I mean, the numbers really haven't warranted the moves lower, right? So the, for the most part, you're seeing like beat and guide higher, but like the the quality of the move higher has been mixed. So like you haven't really been rewarded across the board for taking like bullish risk into these reports, even though like the numbers have been kind of strong for the most part. Um, so that's why how the market is behaving. So if tech is rolling over and the market's selling off, these setups are going to be kind of tough. Uh, but if the market rebounds and you're starting to see people stepping back into the like tech, then maybe it's worth it to take a shot just because like if everything's risk off, then these names are probably going to continue to be risk off, and whether or not they beat on earnings probably won't matter as much. Uh, so that's why like sentiment's going to play a pretty big role in Salesforce, and then I'll talk about Workday and VMW, Palo Alto, Splunk, and all these other names that are coming up. So options on Salesforce are priced in about 8 points, which is about twice what it moved in August, which was about 4.5 right here. So moved about 4.5 in August. Sorry, about four to five in August. Let's say they're pricing in 8, so more than what it moved then. Um, but if the number is good, I mean, 200 the 200 day is really like the key level, and that's about 12 to 13 points higher. So, it could have a quick bounce, but again, sentiment's going to play a big role here. A strategy maybe focusing on a longer term, a longer term position, focusing on like a rebound back to 200 day could be a decent play here. Thinking like if the numbers are positive, it can start working on like a better rebound. Um, so thinking maybe like a longer dated call spread or a call fly, right? Even maybe like a calendar spread, take advantage of like higher near term premium to kind of offset like a longer term position, something like that. That could be the strategy on Salesforce. All right, Nutanix. So this actually started to turn south before a lot of like the tech and software names. So after August earnings here, it just really started to break, and then once it lost 50 is really when it started to accelerate. So at this point, Nutanix is obviously well off its 52-week high, about 40% of its 52-week high, and it's below this key like 50 support level, which you can see here. So kind of like a tough overall setup. Nutanix moved. It moved above 4 to 5. It moved like 4 to 5 last quarter, right? And 3 of the quarter before in May. So right here. Oh, sorry, right here. Moved about 3 points in May. So you have 4 to 5 last quarter, 3 May. The problem is that going into this report, options are priced in at about 7. Those are monthly options, but still, it seems like the options are a little bit more expensive than what it's moved in the past. I mean, I do know that it's obviously acknowledge that it's come way off its highs, but with the last couple quarters only moving 4 to 5 and 3, I mean 7 points seems like kind of like a stretch. I mean, technically, with it at 40, that there could be a pretty quick 5 points either way, 5 to 6 points, right? So, 5 to 6 to retest the November bounce high, 5 to 6 to, well, I guess about 5 points to retest the October November low. Um, but again, options are priced in seven, so it seems a little rich at the moment. So this could be an avoid. It'll be on the radar, but options seem to be kind of taking away a lot of the move there. All right, Wednesday morning, a couple retailers. So Burlington, Dick's, and Tiffany's. Tiffany's will be a big one. So let's start with Burlington. So maybe like this could be set up for a pop if they have a strong number. So kind of against the trend here. It was dragged down with this past week. You had TJX and Ross Stores, so it was dragged down with those two off-price names reported. Um, it's hanging, as you can see, right around its 200-day. So it's down pretty sharply, hanging around key support, even like 150. The past few months has been pretty key. I mean, I don't want to say all bad news is priced in, because it's still up pretty substantially year to date. But pretty sharp move in the last week and a half around key support. Maybe if they have like a decent number, you could see like a snapback. Right? I mean, there's a pretty clear gap into the high 50s. Looking at options, the price is in about 10 points though. Give or take the weeklies are about 10. So it's going to have to be a pretty significant move to pay here. So if you're looking at it, some sort of spread is probably going to be the better bet, just because the what the options are pricing in. I actually, so the next one, Dick's. I actually feel like this is a decent setup. So you have pretty well defined range on Dick's. Basically, since it reported at the end of May, pretty nice range you can see here. So 38, 39 resistance, support 32, 33. The biggest issue with Dick's is that Hibbett is going to report earlier in the week, what I talked about before. And this is going to have a pretty big impact on Dick's. So as you can see here, so this gap down right here in August, that was when Hibbett reported their August numbers. So I mean the stock. So on that move, like Dick's dropped about 3 points. So Hibbett is going to have a pretty big impact on Dick's earlier in the week. So I mean, depending on how that looks, after Hibbett, it's kind of determined whether there's still a trade left here. I mean, just looking at the options strictly, the price in 3.75 ish. It's like 3.75 point move, which in the context of what it's done over the last 2 quarters, actually seems kind of light. It moved 8. It moved 8 back in May, and then it moved 4 right here in August. So 375. Those options seem kind of light. But again, if Hibbett like tanks and Dick's gets hit for 4 points, then it might not be that interesting. Or the opposite, if it beats and rips, then again it might not be that interesting. So we're gonna have to wait and see how the Hibbett number looks, and then see if Dick's is still presenting a trade there. All right, Tiffany's. So this is going to be a big mover, but this is a tough setup. Right now I'm thinking kind of like speculative short, and I'll just go over why. So blowout report in May, right? I mean, just big number, massive move over the next month and a half. It went all the way up to like past 140. But August earnings, which you can see here, big green to red reversal, and then it flushed. And basically, since that move, it's just really not been able to hold any like higher levels. Failed at 130, and then it dropped through the 200-day, and then 200-day became resistance, and now it's not. Basically, it has erased the entire move from May. So it's hanging around 100, having erased a 40% move, right? This quarter in August was mixed. So coming off a mixed report, earnings momentum is dried up. The stock momentum is clearly lower. Retail has been a lot of sell the news. I'm thinking like this could be a decent speculative short. The options are pricing in 8.5 points, which is not crazy considering some of the moves it's seen. I mean, like this one was an outsized move at 25 points, but even this move was about 10. So 8.5 is not crazy, but I feel like momentum is down, earnings momentum. So this quarter kind of like broke up the momentum on the earnings front. Technically, momentum is lower, so I'm thinking maybe like a speculative downside. Uh, but maybe not a huge move. So some sort of like lower risk, short term spread or like put fly. Something to try to take advantage of like a smaller move down, maybe into like the mid to low 90s is kind of what I'm thinking at the moment on Tiffany's. All right, after the close Wednesday, a couple smaller software names. So Box and Viva. Box, you're probably familiar with. Traded this one a few times this year. Kind of mixed performance on it. Swings, had a couple swings that worked okay. Earnings, not so much. And what I mean by that is Box really tends to perform pretty bad or perform pretty poorly after reports. I mean, like the numbers haven't been bad, but the stock has reacted pretty bad. So each quarter this year, here, right, red. Here is earnings in May, red, and then in February, earnings, red. So each of the 3 quarters this year, the stock is opened pretty sharply lower the next day. So you have weak earnings reactions, right? All 3 quarters this year, the stock is open red. The stock is at a 52-week low, so hanging basically at its worst price in since mid 2017. And the sector is not acting great. So, just this it just seems that everything is lining up for like a bearish bet here. Uh, the biggest issue, I guess, with like the outright bear trade is that this one's been floated around as an M&A candidate. Um, so, downside could be a little bit more limited. Um, but options are priced in 275. So maybe if you look at something in like the 15 area, you could see like maybe like a $2 to $3 move lower. So maybe just not instead of not doing like a volatility strategy, just like a straight up bear strategy, looking for like a move down to like the 15, 14 area. But down to like the low low teens, like 14, 13, maybe not so much. It seems like it could be a stretch, but with poor like poor reactions all year, the sector acting weak, the stock technically under like key long-term support, you're probably thinking bearish. So we'll be looking at that for like maybe like a spec bearish bet into earnings. Vivo was the other one. So it's probably not a household name, but the stock has been pretty impressive, or was pretty impressive up until the beginning of October. I mean, pretty sharp run. Big move after August earnings here, and then it topped out about 110 in September. It's pulled back off of that, but still, not as substantial of a move lower as some of the other names in this sector. Options on this are these are monthly options. They're priced in about 12 to 13 points, which is actually pretty substantially above its yearly average of about 8 points following earnings. So, options are pricey, which means that this could be an avoid. Also, there's not really any like compelling technical levels, in my opinion. Kind of like choppy, spinning around between moving averages. This could be one of those scenarios where occasionally you'll see some like big option positioning right ahead of earnings, which kind of like tips the trader's hands. So if I see some of that, maybe point it out, hop on board. But options are expensive. The setup's not too compelling. It will most likely move, but whether it moves 12 to 13 seems like it might be a stretch. So at the moment, thinking an avoid on Viva. Thursday morning, so a couple more retailers, Abercrombie and Dollar Tree, and then also new IPO Yeti, so like the cooler company, which I'm sure you guys are familiar with. So that's also Thursday morning. So let's circle back to Abercrombie real quick. So we have Abercrombie, which is down about 40% off its August high here. Things just been killed. I'm thinking actually decent. This could be a decent volatility bet, right? So don't really have direction. I mean, it got crushed after last quarter, so maybe more bearish, but you know overall it's still it's got a decent amount of short interest. It's had a huge drop. Um, Looking at the options, they're only priced in at about 2 points. But it moved closer to 5 last quarter, and there's a couple big gaps in the chart which I like too. So I'm thinking like straddle, strangle, options seem to be pretty underpriced considering where it's come from, the type of gaps it had last quarter, and the gaps underneath. So I'm thinking yeah, straddle, strangle could be something to watch on Abercrombie. Dollar Tree, this one another one that kind of falls into like the speculative short camp. So, I mean, similar to Box. I mean, and Box is obviously not a retailer, but similar to Box, it's basically Dollar Tree has gotten smashed on each earnings this year so far. Just really significant red drops the following day, which you can see here. So, uh, you know, been in a pretty tight consolidation above key 80 support. Um, so the stock is all 3 quarters gotten smashed. Retail is not acting particularly great. Been in like kind of a tight consolidation above key support. So you're thinking, if this number disappoints again and it breaks like this 80 support, I mean, there's a pretty well-defined gap down to like 74, 75 with, even potentially more room down into like the low 70s if that doesn't hold. So, I kind of like it as like a bearish setup into this print. Options are priced in at about 8.5 points, which it's in the context of some of these other moves is not too much. So you're thinking if it breaks 80, you could see at least like another 5 to 6 down to close this gap, and then maybe even more down into like the low 70s. So some sort of bearish bet, maybe like a spread, even like maybe like a shorter term put fly, right? Like a wider put fly could be like something interesting here, but definitely have like a bearish bias onto this one, on this one into earnings. And then we'll circle back to Yeti here. So Yeti, right? Interesting recent IPO. Actually, performance so far been pretty good. I mean, it's hanging right at its best price since coming public. Um, so it's not as if like the setup overall is that compelling, but I kind of just like playing these IPOs on their first report, especially like hot IPOs that get a lot of retail interest because they can be pretty volatile. And like options don't really know what to price in because it doesn't have any history of moving. So options are a little bit more like throwing darts at a board, like trying to figure out what the price to move is there. Uh, I mean, right now, the monthly options, the December 21st expiration options are priced in about 2.5. Uh, but like you just never know with these IPOs. I mean, like sometimes they can just be really underpriced. Like they don't they don't reflect the demand. They don't reflect the type of volatility you could see. So. Uh, it just could be worth a shot. Maybe play it both ways. I know it's trading near the high, but I mean, it traded all the way down to like 14.50, so it's about 3.5 points off its post IPO low. So if it disappoints, it's right there. You're seeing like 3.5 points, whereas options are like priced in 2.5. You got Sonos's move in the back of your mind, and that thing got smashed on its first report. So definitely something that's going to be on my radar. Thursday morning. All right. After the close Thursday, it's probably of the biggest night of earnings next week. Maybe even for like the remainder of 2018, actually too. So it's a really big software tech night. You have HPQ, you have Palo Alto, Splunk, VMware, Workday, and also relatively big apparel name PVH. So, I kind of mentioned it earlier when I was talking about Salesforce, right? You can see like, kind of a setup broken below its 200 pretty sharply. But, Palo Alto, right? Like you look at these charts, very similar. Splunk, Workday's hanging in a little bit better, but but still kind of chopping around its 200-day here. Um, of those, VMW is a little bit different, but that's also due to like some M&A headlines. So kind of like a different factors at play with that one. But like those other three, really very similar setups for the most part to Salesforce, and I really feel that sentiment and the overall risk environment is going to play a pretty big role in all of those. So um, thankfully Salesforce goes early next week, and then we can see how Salesforce reacts, and then with Palo Alto, Splunk, Workday, seeing how Salesforce goes, then maybe we can figure out a trade on those three. But I kind of just lump them in the same category because the setups are similar. Bigger software names. They tend to move pretty well in earnings, but I feel like the overall risk environment is going to weigh pretty heavily on what you see with those. So kind of wait and see. With Salesforce earlier in the week. HPQ I actually think is interesting. Not maybe not the sexiest growth stock, but you can see old school hardware, right? But it's been a pretty consistent mover, and what's been the most consistent is this 200-day, right? I mean, look at this, just crashed to the 200-day, held again, big bounce, crashed to the 200-day, held again, big bounce, and then finally it broke, right? So after like 7 attempts, 7 tests of the 200-day, it finally cracked. So it's going to be going into earnings this week below its 200-day for the first time this year. And basically, wait till it gets back up here. So basically, what I'm thinking is that like this could be a with the stock below key technical levels, right? This key like support level, it seems like the volatility is set to be higher this quarter just because it's lost like yearly support, right? I mean, like overall, like if the 200-day wasn't there, like it might not have been interesting, but because of the like how well the 200-day held over countless attempts during the year, you would just assume that once it finally breaks, that the volatility should expand, almost like Nvidia a couple weeks ago, right? Like it was in a really big trend, and then when it broke the trend, the volatility started to expand. So like HVQ is kind of like a similar rationale for a trade where it's like once like long-term support finally breaks, you're expecting the volatility to expand. So looking at options, the price in about $1.25, which is kind of in line, give or take, with what it moved the last 2 quarters. So the options aren't cheap, but the problem, the issue is that volatility may be underpriced here, just because when it loses key support, there could open up like kind of like a downside scenario where you see a move down to like this really much larger area down in like 2075, even maybe like retest like the 20 area from like this February like blow off low, right? On the upside, a pretty well defined gap with room maybe to even like 24. So it seems that options are priced to reflect what it's done on average the last couple quarters, but they're not pricing in, like the new technical reality with the stock below key support and volatility probably set to expand. So like that's what I was thinking, like, straddle strangle, some sort of bet to try to capitalize on options that seem underpriced there. And then PVH. So this is a apparel name. This thing's just been absolutely run over into earnings, which you can see. I mean, that's a pretty ugly looking chart. So 170 down to 110. It was rocked after August. So this was August earnings here, right? Rocked and basically never recovered. Held 145 and then just like lower lows, lower highs, just consistently getting pushed lower here back to 110. The thing with August is that the earnings actually weren't too bad. They actually raised guidance, so the stock performance maybe not totally in line with what the earnings said, which to me seems like it could kind of present like a bounce back candidate. Stock oversold, just dropped 35-40% off its high. Numbers last quarter weren't bad, raised guidance, trading at like 11 times earnings. I feel like this maybe you could see like a move back to like 120, 125 back into this congestion area. That's what I was thinking on PVH. Options are priced in about say like 11 to 12. So if you're only looking for moves at 120 to 125, maybe not a lot of room. So thinking maybe like some sort of cheap call spread, something out of the money, a little bit more aggressive, but like cheaper on like the debit side or risk side. Something to kind of like get risk down a bit, but capitalize if you see like maybe like a 10 to 15 point move back into this congestion area, right? Like this last move really like knocked it below like this recent consolidation. So I'm thinking maybe if earnings are decent, it could snap back into this area pretty quick. So some sort of bet, maybe even like a call fly, something like short term, low debit, low risk, looking for like a more speculative move back into this congestion area here. All right, Friday morning, pretty quiet. Nothing really jumps out at me on the radar there. So that just means that Thursday night's reports are going to be even more important and really going to how Thursday night earnings go definitely going to impact Friday's action in a big way. Um, so like those software names I talked about, like the VMWs, the Splunk, Palo Alto, Workday, all of those. Those are some key stocks in Friday. So this coming Friday is actually the last trading day of November. So with a bunch of software names reporting, you figure tech is going to be in play going into the end of the week, and probably setting up like a pretty volatile last trading day of November. So we'll probably expect some pretty good action as we head into the month end here. Cool. So lots to look forward to this week. Also, wanted to point out that T3 is having a really big Black Friday, Cyber Monday sale. Worth checking out. Some really discounted deals on all sorts of great education material, different rooms. So be sure to check that out. I'll have like the link to that in the description of this video. So go ahead and like follow up, like check that out. Really, they don't do this often, so I would definitely spend the time to look into it and check that out for sure. As always, I'd love to hear from you guys. Questions, comments, reach out. Again, plenty more earnings, and we're gonna kind of head into some busy biotech portions, busy biotech conferences. So expect more biotech catalysts coming up in the near future too. So have a fantastic day, and I'll talk to you guys all tomorrow.